All right. Welcome back. Your boy Yadi back again with another video. All right, on this beautiful Sunday, market's open. Appreciate y'all stopping by. Appreciate you allowing me to share some information. I'm gonna get right into it. So, having created a plan or a full process that I'm comfortable with, incorporating the risk management side of things, how I plan to manage trades as I enter them with a break even, the trail in it, the partials, trying to see how much I can work on that, especially the risk aspect in terms of how much I'm risking per trade. I've also I'm trying to finalize on the trade plan aspect of it as well, kind of where I'm getting the trade ideas from. The monthly, the top down analysis portion of it. So from the monthly, weekly, daily, and then finally incorporating the hourly time frame, which is the intraday time frame, using the Wyckoff schematic, either accumulation or distribution, to get entered on plays at specific points. But this specific video now, I'm gonna be taking a step away from EUR USD, kind of just in an effort to demonstrate the versatility of the process itself in regards to how capable it is in finding trades on different charts. So not just EUR USD, but just to start getting my feet wet, testing the waters in terms of using the same process, but on a different pair, really and truly. So to make this a bit easier, so I have EUR USD as my main pair. I'm gonna be using GBP USD and AUD USD as the examples that I'm working with, just to branch off a little bit. But all these charts, as you can see, are all moving in the same given direction. Order flow for them should be similar, and as such, the trade ideas being found should revolve around the same concepts. But a lot of yip yap, I'm gonna get right into it in terms of what I'm doing. So again, first chart here, GBP USD. I'll actually start with AUD USD. I like an opportunity I'm seeing on that. I was looking at it prior, but again, same top-down analysis. We can see that just to establish a bias here, we're within this monthly range, high to low. Order flow has been breaking down, right? We'll fill in most of this price. Look as if we're targeting these lows, right? So monthly direction is down, treating the low down here as a target, right? And to get right into the candles, you can see we've been breaking down, right? Clear downtrend. We shift bullish, but immediately break down, come back up into the block, and we're breaking down, right? So for that aspect of it, I'll be determined that we are delivering to this low. That's about it. Now, digging into the candles themselves monthly, we did take the last month's candle just by a little bit, which in regards to everything else I've been looking at does tell us that we're heading towards, the bottom side, sell side liquidity. So we're going down is all I'm really stressing here. So again, monthly, we're going down. I'll go to the weekly. From the weekly, you can see that this break that happened on the monthly took place on the weekly, really from this buying to sell candle that did shift bullish above these highs, but then broke back down below the lows. That's telling me that it wants to go down. They're just showing their hand, right? So from this weekly, I'll go to the daily, and what you'll find is the actual impulse responsible for the break, right? That being this right here, and the inefficient candle that we're looking for being this one that always shows itself when a weekly candle breaks. So this is the inefficient candle we're working with today's analysis. This chart, gray, this high we want treat as protected. I'm gonna assume all orders have been filled in on this chart. So if I'm on the daily right now, you can see impulse from high to low. That's the most recent impulse, with this being a target. What I'm gonna do now is incorporate the last step, and right. So right here, I'm gonna go back over the plan real quick. We've decided on the monthly for the direction. We found the weekly break, the daily inefficient candle, the supply candle in this case, being that we're going down. And then now it's to find the hourly, well, Wyckoff confirmation really, to find an entry to take lower, right? So from the daily within this zone, treating this high as being protected and this low being a target. I'll shift to the hourly and start finding what I view as Wyckoff. Now, in this whole range of price, the block that is highlighted, the daily block, we can see that they're pulling price up really high into it. There's a lot going on over here. This structure, however, was sitting between this low and this high, really and truly. So the fact that this came all the way down without breaking this low, but then targeting this high makes sense. So for me, the schematic I'm looking for wouldn't start taking place until over here, which what I'll do is refine this zone down to the highest candle up here. This is the candle up top, right? So I put this back, right? The zone is from low to high. If I refine it to the highest supply candle available, being this one, you'll see that they've brought price all the way up into it, one of the deeper mitigations, but haven't, well, after bringing price up to that, price has shifted bearish right here. Now, that to me is pointing out Wyckoff from here, which I can start labeling BC AR. All I'm looking for is equal highs in the market being set up. Secondary test, right? And then the move up through those highs, UT. And you can see that in this specific schematic, they don't all look the same, but they all operate using the same pieces. We have a move down. I'll just consider this a sign of weakness. It's not too big of a move, so it's not to be stressed, but I mean, I'll just include it just because. And then the move up through all liquidity with volume, giving me a UTAD, up thrust after distribution, sweeping all prior highs, tapping into the actual supply, and then shifting structure to the bottom side. So this is everything I need to see to complete a full schematic. And being that this is the UTAD, we will treat this high as the protected one. Granted, the high above this daily candle we're looking at was being treated as protected anyways. So we are close to that. And the closer we get to this point, the more aggressively price should move away from it. Hence, structure shifting clearly with impulse to the top side, buy into a sell below the bottom side. And the unmitigated or the most open price that I'm seeing up here that I could possibly pull back up into to then go lower. So I'm looking at two places here. You have this block, make it a different color. You have this block right here, which has missing price, hasn't been tapped into, has equal highs sitting above it. And you also have this wick right here on the hourly, which they did fill price in, distributed price. So kind of a fractal distribution now where we have equal highs, brought higher, swept again, brought down, this being a fractal LPSY. So for this specific video, I'll use this zone as the zone I'm looking for, price to deliver into. Again, what really matters here is finding the zone. So either of them really works, but where you put the stop loss is what matters most. So I keep stops above this high, keep it protected. Entry at the zone, and I'm gonna target the lows that we're trying to deliver into, right? So all the trend line liquidity you're seeing right here, right? All of that kind of leading into being swept. So again, this is a full top-down process right here. This trade plays out, we get a nice 1 to 3.6 out of it, which is beautiful. Again, we're just looking for it not to be stopped out and trying to follow the rule set in regards to everything that we're looking for. So that's about it for this specific pair. Again, just trying to go through the full top-down process. I'll go back through the plan real quick, make sure we have all parts. So monthly candle, we determined broke to the bottom side. Weekly, we found the buying to sell candle that did break to the bottom side as well. We spotted the daily inefficient candle for the supply and demand. And on the daily, you could see the clear impulse bring us to the lower side. And then on the hourly now is where we finally are, is to find the schematic playing out in terms of confirmation to find an entry somewhere safe to get in at and put the stop loss somewhere safe as well. So stops either above this high. Granted, we are so close to the daily high. It does make sense to just put it above here, just to keep it even, that much safe, that much more safe. But I'll try practicing keeping it above the UTAD, as this shift right here does indicate that the high should be protected. So it going above the high shouldn't be a possibility anyways. So I'll just try keeping that as is and work with this trade idea right here. But this trade idea is set in stone. Not much else to do with it more than to apply the accounts that you use to take the actual trades, which that's another video that I'm going to be creating, because all of this information that I do present, it has a purpose and it can be used on specific accounts entered with these three numbers really: the entry, stop loss, take profit. But hey, not financial advice. Your boy ain't putting financial advice out there, right? I'm just working on my craft, getting that out of the way. But everything I do has a purpose. So that's just all I'm speaking on. So that's it for this chart right now. We'll see how it plays out. I'll update this video. I'll try doing another one on GU as well to see how that plays out. But I'm kind of just breaking down chart by chart, trying to extend what I'm doing into different markets, different charts, as they're all just candles, and seeing how versatile the strategy is. But all in all, that's about it for now. I appreciate y'all time. Appreciate y'all stopping by, allowing me to share information. You feel me? You have a wonderful night. Thank you.